My name is Elise Olwig, and today I will be pitching Coca-Cola FEMSA to the Marquette AIM International Fund. Coca-Cola FEMSA engages in the production, marketing, and distribution of non-alcoholic trademarked Coca-Cola beverages. These include the brand names Crush, Fanta, Schweppes, Monster, Powerade, and Dasani, among others. The company operates as a subsidiary of FEMSA, which has 47.2% ownership. FEMSA is the holding company of Mexico's largest chain of OXXO convenience stores. Revenue for KOF is derived predominantly from Mexico, with 47.8% of fiscal year 2020 revenue coming from Mexico and Brazil, representing 30.6% of fiscal year 2020 revenue. Coca-Cola FEMSA is the largest franchise bottler of Coca-Cola trademark beverages by volume in Mexico, operating as a mission-critical business to one of the most valuable soft drink brands in the world. Mexico yields one of the largest per capita consumption figures of sodas, as individuals drink on average 36 gallons compared to 26 gallons in the United States. This unparalleled scale merits tremendous go-to-market optionality within the region, and the leading volume allows the reduction of fixed costs per unit through more favorable raw material procurement versus local peers. The company reported strong Q2 results as volume surged 9.1% year over year and revenue grew approximately 11%, representing a 4% street beat. Gross and operating margins were up 263 and 197 bips quarter over quarter, respectively, even as management increased marketing expenses. Despite COVID-19 headwinds this past year, Coca-Cola FEMSA is on a strong road to recovery. Thus, it is recommended that Coca-Cola FEMSA be added to the AIM International Fund with a price target of $65.61, representing a potential upside of 15.55%. Driver 1, COVID recovery volumes. The negative 6% total revenue depression in fiscal year 2020 and subsequent stock price drop induced by the pandemic presents an attractive opportunity to capitalize on recovery tailwinds. In Q2, Mexico sales increased 12%, Central America volumes increased 17% year over year, and Brazilian volumes grew 15% year over year. Recovery volumes are predominantly attributable to the fact that Coca-Cola FEMSA sells most of their beverages through small retail stores and corner shops, which began to experience more foot traffic in the wake of vaccinations and economic reopening. Coca-Cola FEMSA is on a strong recovery path, which is reflected in the stock's 25% year-to-date uptick. As COVID-19 headwinds continue to gradually dissipate from the market, Coca-Cola FEMSA will reap the benefits. Driver 2, Digitalization and Omnichannel strategy. In 2020, the company began a transition to digital channels and platforms to cater to customer needs. Coca-Cola FEMSA is utilizing a WhatsApp-based chatbot feature to digitally accept orders from merchants, which allows convenient and efficient selling windows for clients, and 24/7 AI-based customer support. There are approximately 300,000 active users registered on the app through Mexico and Brazil, and Coca-Cola FEMSA received approximately 15,000 orders per day through the new platform, the equivalent of 200-plus salesperson customer visits. The WhatsApp penetration is proving to be margin accretive, generating high-ticket orders while cutting down on human capital need. The platform is expected to represent 15% of total sales by fiscal year 2023 and contribute to at least 10 bips of margin accretion as the platform expands to other territories. Driver 3, boozy in Brazil. The company's expanding South American exposure also presents substantial growth potential, particularly in Brazil and surrounding areas, as it was one of the only geographies to experience organic growth in 2020. Beer accounts for approximately 42% of total bottled beverage consumption in the region and 8% of Coca-Cola FEMSA's revenue in fiscal year 2020. Coca-Cola FEMSA recently announced a renewed agreement with Heineken that allows the firm flexibility to distribute non-Heineken products, in addition to the Kaiser, Bavaria, Sol, and Eisenhahn brands. The firm has identified 6 potential targets, including Brazilian premium and craft brewery Theresópolis, likely for a mid to high single-digit multiple. Although a temporary pullback in beer revenue from the loss of Heineken and Amstel brands, the renewed agreement allows for a premium segment play and the entry of the bottler into the Brazilian brewery industry. This is seen as a marginally positive move that diversifies revenue mix and substantiates the opportunity to find and capitalize on significant growth pockets, contributing an estimated 10 to 12% volume increase in Brazil over time. In order to reach an intrinsic valuation, a 5-year DCF was constructed. Using a terminal growth rate of 1.25% and a WACC of 6.10%, an intrinsic value of $70.42 was reached. A sensitivity analysis on the terminal growth rate and WACC of plus or minus 50 bips range from $51.13 to $116.66. Additionally, an EBIT to EBITDA multiple valuation was constructed using a blended average multiple of 7.30 times, which resulted in an intrinsic value of $68.21. Next, an EV to EBIT multiple valuation was calculated using a blended average EV to EBIT multiple of 9.78 times, which resulted in an intrinsic value of $61.81. Furthermore, a PE multiple valuation utilizing an EPS of 246 and a blended average PE multiple of 19.24 times resulted in an intrinsic value of $52. Finally, a DDM model was constructed using the aforementioned terminal growth value and WACC, which resulted in an intrinsic value of $51.51. By weighing the model 60, 10, 10, 10, a price target of $65.61 was reached, resulting in a potential upside of 15.55%. Coca-Cola pays a dividend yielding 4.20. Key risks. Coca-Cola FEMSA has considerable exposure to foreign currencies, particularly the Brazilian real, the Colombian peso, and the US dollar. If the company is unable to adequately hedge against such currencies, operations would be adversely affected. In addition, key ingredients in Coca-Cola FEMSA's final products include commodities that are prone to price fluctuations such as PET resin, aluminum, and sugarcane. Lastly, geopolitical risk. So the company has raw Latin American exposure with 100% of operations outside of the US. This presents risks associated with foreign government politics and policies. John Anthony Santamaria is the CEO of Coca-Cola FEMSA with previous experience as COO of the Mexican division. Jose Antonio Fernandez serves as chairman of the board with previous experience as COO of OXXO. Of the 17 directors, 9 are independent and all are male. Thank you for listening to my presentation, and I look forward to Q&A.